Welcome to the Tech Blog Writer Podcast, your guide to future tech trends and innovation in a language you understand. Now, over to your host, Neil Hughes.
Welcome back to the Tech Blog Writer Podcast. Now, after looking at how tech is transforming multiple industries and in diverse industries too, such as yoga and classical music alone this week, today I turn my radar to the traditional world of real estate. Today's guest is an expert on the real estate industry and is setting out to transform the real estate investment process by making alternative assets available for real estate investors with DiversyFund. DiversyFund is based in San Diego, which is a place that I'd love to live, getting up every day and it's 70 degrees. That sounds ideal to me. But it's a crowdfunding platform that gives average investors access to institutional quality real estate investments, all from their smartphone. Now, Craig Cecilio, CEO and founder of DiversyFund, is waiting to speak with us on the podcast today. And I'm looking forward to learning more about, after 20 years of experience in the industry, how he is seeing and also a big player in disrupting that old school investment practice. So anyone interested in the fusion of real estate, technology and crowdfunding should be in for a treat. So buckle up, hold on tight, so I can beam your ears all the way to San Diego so we can speak with Craig Cecilio, CEO and founder of DiversyFund. A massive warm welcome to the show. Can you tell the listeners a little about who you are and what you do?
Great, Neil. Thanks for having me on the show today. Appreciate it. Yeah, my name's Craig Cecilio. I am the CEO and founder of DiversyFund. We are a vertically integrated crowdfunding platform. And what that means is we both develop and manage the properties that we offer on our real estate crowdfunding platform. We started this in 2014, founded the company. We took our first online investment, I would say November 2016. Within the last 12 months, we put about $100 million under management. And this year, we're seeking to triple the amount of assets under management. One of the things I like to say that bring back to is that we're a vertically integrated platform where the majority of our competitors are not. I believe we're the only real estate crowdfunding platform that is 100% vertically integrated, and that's a big deal. We do that for a variety of reasons. More importantly is we love the transparency we're able to provide for our constituents. We like the reporting we could offer, and we also like the quality control we could set up since we are the operator, manager, and developer of those properties. It really creates a great experience for our customers.
Fantastic. Now, I'm a little conscious that a lot of people are going to be tuning in and hearing about you guys for the very first time. So before we delve too much into DiversyFund, I think we need to get everyone listening up to speed. So my first question to help anyone that's new to this world of new investments is, what is real estate crowdfunding? It's a fantastic term, and crowdfunding is huge at the moment, but how does it impact the world of real estate?
Yeah, I mean, the short version is it's where you bring a group of people together to fund a project. And through technology, we're able to leverage that. So in the past, I've been doing real estate syndication for about 20 years. You'd go and you approach 4, 5, 6, or 7 people, how many it takes to fund your transaction. So that takes time, energy, get on the phones, face-to-face meetings, certain dollar sizes from certain people to fund your particular project. Now, through technology and through the regulations that was passed through the Jobs Act, we're able to solicit those funds from the general public. We're able to use technology to aggregate that. So, for instance, we could put something on our platform. We could put it on our web platform as a website. We could send out an email. We could throw it on social media. In real time, anyone can invest into that particular project. So what that does is, for instance, let's say we need to raise, let's use a number like $1 million. Now we can get that money from maybe 1,000 people or 10,000 people at a lower amount instead of approaching maybe 10 people with $100,000. We use the technology to aggregate or collect all those funds.
Now, you mentioned there you have been in the industry for over 20 years, and that was before technology was transforming the industry like it is now. So before we get there, can you tell me a little bit more about your story, your successes, failures, and experiences in the retail industry before technology came along?
It's like anyone else. It's quite quite a story. A short version is end up in San Diego in 1997. Before that, I lived in Colorado for 6 years, and before that, lived in the East Coast in Connecticut. I lived in, so that gave me a broad spectrum of the U.S., and I had a broad network. So I had that to start out. But I was pretty young when I was out here, so I did have to prove myself. I got involved in real estate as an agent, as a loan officer, as a developer, as a flipper, started all that out at an early age. And I was fortunate enough to come into contact with some individuals who were in the syndication business, I would say my first 12 months out in California. So they really exposed to me real estate syndication and how it was done, developing projects and raising money for projects. Now, along that spectrum, I adjusted according to the market. I bought property according to the market. I lent money to third-party sponsors according to that market. But I also implemented technologies. I've always been a massive networker and always liked to meet people, so I was always aggregating people's names and emails and all this stuff, and I was trying to implement technology a little bit to get everyone I met and show them my projects. So it was a kind of a natural course for me to get involved in crowdfunding when I heard about that, the Jobs Act, and how you could leverage technology to do this. So also during that time period, I got to deal with the different markets out here and saw by those markets a couple patterns with those markets. I was fortunate enough to survive those markets where our investments that we didn't lose any of our investors, any principal. So I had two things going for me. One is I was applying technology at an early stage. Well, two, I met the right people at the right time. Someone taught me the business very early in my first year. And three, I was able to gain experience and survive the downturns of the market and take advantage of those opportunities. So a lot of things really went my way, but a lot of that was kind of persistence as well. I kind of just stuck in there and kind of really just kind of went to work each day and trying to make myself better and trying to learn as much as possible. But along that, I got to see some patterns in the market, and I went to myself, hey, you know what? For this really to work, I have to develop a platform that is more structured around transparency, market proof, more control. I don't want to go through what I went through in these market downturns. And so that's where I came up with the idea to do a vertically integrated a platform. And like everybody else, I would say, hey, my business was like an accordion. During the good times, I had a huge staff. And on the times where it got really, really rough, we kind of brought that staff down. I thought there were certain indicators out there where you could take advantage of things. In 2009 and 2010, when everybody was running for the hills, I thought it was a great time to buy property. And I was buying properties at very low dollar amount, which was looking back, was such a great opportunity. I always had a positive frame of mind. I always saw real estate always producing an opportunity for you in any type of market. I was always kind of very solution-based with my thought process. When I counter a problem, I think I'm the last person to say it can't be done or no. It's more, hey, give me a solution. Give me, how are we going to solve this? What's the workaround on this stuff? And the other thing I think is more of a personal quality is I understand that being in real estate is not just a quick shot. It's not a get-rich-quick scheme. It's kind of a marathon. You need to stick with it. You need to be diligent about it. You need to be persistent. You need to constantly improve yourself. You need to learn. You constantly need to gain experiences all the time. And you have to be very flexible and adaptable, too, with new things. And then the last 5 years, I got to say, I love with technology. Technology provides a lot of data, too. And that's something that we didn't have in the past. It was more intrinsic, but it's not just being able to have that data, it's how do I apply that data? It's like, how do I apply that data to the business I'm doing? So that all being said, I mean, I kind of just shrug my shoulders and say, hey, wasn't too hard, but it's been quite a journey to the last decade or so building this up.
Some of what you said there reminded me of the quote, be fearful when others are greedy and greedy when others are fearful. So that's essentially, you made your move when others were too scared when those prices were low. But, you've earned your stripes learning from that daily grind. But then actually stepped up to the plate and learned how to leverage technology. And here we are now with DiversyFund, which is essentially a full-service online real estate crowdfunding platform that essentially connects investors to high-quality real estate investment opportunities. But can you tell me more about how this investment platform actually works?
Yeah, I mean, the platform's pretty simple to use. All you have to do is go to the website. It's going to have information about the particular offerings of particular projects posted online. Very user-friendly. You go there, you log in, you subscribe to an account, you scroll around, you read all the information we provide. We're constantly learning. We're constantly adapting. So any feedback is very much accepted by our staff here. We're always trying to put better and more data up there for people to make easier decisions for themselves if they'd like to buy. And once you do decide to subscribe and then to select a particular offering, you decide the dollar amount. Right now we have a stuff as low as $5,000 as a minimum. I believe in April that dollar amount will drop to around $500. And once you do that, it's pre-automated. It comes straight out of your bank account, straight into an escrow account for us. All the papers are delivered to you digitally. You have a back end of our website. You have an account set up where you can log in and track your investment and track its value and track the project itself. So it's great having all that online where every question that you had is answered online. And some people just like that a little bit better. They don't want to talk to a salesperson or they don't want to talk to someone about stuff. They just kind of want to have an area where they can make decisions for themselves online. And likewise, when the transaction is completed, people want to be able to go to a place where they could monitor and track their investment and have kind of a place any hour of the day, any time of the day, they could check in and see how their money is doing and where it's going and what's happening with that particular investment.
So when you first looked at actually leverage technology within the industry, you must have come across a lot of pain points and friction points. So what problems did you actually aim to solve with DiversyFund and also make it different and stand out from other solutions out there?
Yeah, great question. Yeah, pain points of technology, it's a never-ending story. So we're always constantly learning. We're learning and adapting. I'd love to say we're constantly learning and adapting and applying new technologies all the time. Now, one of the things I like to say, and earlier I said the aggregation of investors. Well, let's face it, who is going to really give this opportunity to the average Joe out there? Most of these investors are given to high net worth individuals, maybe with $1 million, $5 million, maybe a private family office who's got $100 million, private hedge funds, private bankers, institutions. They aggregate, they dominate this market, they take and cherry pick all the best investments for themselves. So how's the average Joe ever make any money? How's the average Joe ever build wealth when all the best investments are reserved by the wealthy already? They don't even have a shot to go up the food chain here and anywhere. So what we're doing now is we're saying, okay, now we're going to offer this to you. We're going to leverage technology so we can compete with that $1 million, that $5 million, that $10 million investor who otherwise would just write one check to finance it. Now we're just using technology, and it's going to equally operate just as quickly for us and offer that same opportunity to that person. It does a couple things. One, it offers them that same opportunity to build wealth, and it also, I would say, exposes them to alternative investment vehicles and allows them to diversify their portfolio outside your standard stocks and bonds and savings accounts. It allows them to apply some of their portfolio to alternative investments. So they do have an opportunity to build wealth. And what we hear about all the time is, hey, why can't I get involved? Why am I excluded? How does this happen? Why does and I like to say, why does the 99% not have the same opportunities as the 1%? And what we're doing today is we're kind of taking down that barrier, we're tearing down that wall, and now we're allowing that 99% to have the same opportunity as that 1%. And it does work for both parties here, for us, because the fact is the technology allows us to leverage that person.
It's great to hear you doing this because there really does seem to be a real wind of change in the air at the moment. Like you said, around that 1% and the wealthy ruling those old school investments versus this new era of opportunity and investments there as well. I mean, cryptocurrencies is also something that we'll get to in a few moments. But are you noticing a lot of disruption of those old school investment practices and being replaced with things like the rise of crowdfunding in real estate?
there's a lot of disruption happening. Yeah. We have a long way to go. We really need to get more participation. We need to have more platforms out there, just not our platform. We need to have more credible platforms to promote the industry as a whole. So I do wish my competitors success, because our success kind of is intermixed, because it's never just going to be one of us. There's not one bank. So at the end of the day, we need to get participation. We need to try different things out. We need to get feedback. People have to realize this is new. This hasn't happened before, so we're kind of all learning the process. So getting feedback and participation is very critical to this process. I am looking, and people need to look into, hey, how does technology make my life better, not make my life more complicated? And the other thing is also educating people a little bit about this as an alternative asset class for them, but also at the same time, it's a very easy, passive way to make money, whereas it's not really an active investment style. So it's kind of changing the way some people kind of view how to do things. Hey, I can do this passively, and I can do this through technology. And I think that's a big thing to kind of really kind of educate people about that process as well.
So are you noticing an increase in the use of fintech in real estate? And do you also think that we'll see real estate cryptocurrencies at some point in the future, or to bring that greater transparency into the industry?
That, without a doubt, it's so archaic. Yeah. I mean, where do you want to take the conversation? We could just go into the recording of documents. Yeah. Record it. How long is that? Oh, you have to get to the county recorder's office in this specific area by this specific time, and people are driving around. That's so archaic. I mean, it just blows my mind away. It's almost like it's a government agency that's just trying to be nice here. I don't know.
I mean, there's so many areas we could take it. Like you said, there's land registry is another one, isn't it?
Yeah. So yeah, exactly. Just through technology, through the blockchain technology, imagine that real time that just happens like this. Snap your fingers anywhere that transaction is consummated. It's recorded. It just don't physically have to go to a place, and it's valid and everything. How much time is that going to save? It's going to really make the processes much more efficient. I mean, I see a lot of the government agencies, and I'm not saying I'm anti-government, but a lot of these government agencies are so archaic and haven't applied just whatever reason is these technologies that will it will make things a lot easier for us, but it's actually going to change things because it takes away this part of that process. So how does that kind of trickle down to everything else? And that's what we really need to see happen, is you take care of this. This is moved out of the way. And how is that gonna make those transactions quicker, maybe make them more legitimate, bring more credibility and trust back to it? I mean, sky's the limit what it's going to do with everything. I think it's going to make things a little bit easier. And as far as doing some currency with real estate, that's going to happen. Someone's going to do it in some form or manner. What version of that and how that's going to it's going to trade and what's that going to look like, I don't know, but someone's going to take that chance and someone's going to start that, and it's going to happen.
I completely agree with you. I know where you stand on this, and it's probably the same as where I stand. But do you think other of your peers and competitors in your industry realise just how much the world of real estate is ripe for disruption right now? And how do you see technology continuing to do that over the next few years by leading that disruption?
See, I bring that down to the participation level. It's there. It's ready to go. I think the Silicon Valley, the venture capitalists see it. I think the financial institutions see it. I see a lot of the banks see it that way. And I think that's a great thing. I think they're embracing it, but we need the individual to see it. We need to develop some type of education that all socioeconomic classes get exposed to this technology. It's a little bit top heavy. It's a little bit dominated by the institutional investors in Wall Street and Silicon Valley. We have to trickle this down to everybody. So once that happens, we'll see significant change. It's that way with a lot of industries, but I still think with this specific industry, it really has to trickle down to everybody, and everybody sees it and understands it. And that's so that we take this more of the greed out of it, and more of there is always going to be a concept of a little bit of greed, but let's kind of move that out of the way and say, hey, we're doing safe investments, safe returns. We're doing socially conscious. We're working with socially conscious people, socially conscious corporations. I mean, everyone, Wells Fargo, for instance, how much did they screw up, and how much people still bank with them? Why? Just work with a socially conscious organization, work with an organization that's going to have an impact, a socially responsible impact on society. I think we're going to steer towards that direction as well. Not only we're going to be technology based, but you're going to have to work for a socially conscious organization. And when that happens, we're not just going to see change with the industry, we're going to see a change in behaviors with people and how business is conducted in this country.
So if we've got the average person in the street listening to us talk here, and they're sitting up and paying attention, and they want to embrace change, and they're seeing the world differently, how do they first of all know if crowdfunding real estate is actually for them? And from your experiences in the industry, what advice would you offer to anyone who's just considering getting involved but just want to find out more information?
For us, it's pretty easy. Our platform in the next few months will be open to everybody for as low as $500. Today it's as low as $5,000. So I'd say, hey, why not try it out? It's just a sliver of your overall portfolio. It's not a lot of money depending where you are in the income scale. That's just we're asking just for a little sliver to participate, give us feedback, whether it's through us or someone else. Get engaged, participate, learn, and definitely share it. Share, hey, how this can improve, and this is what I like. This is great. I haven't done this before. We're really looking forward to getting as much feedback as possible and as much participation as possible.
Excellent. So if there is anyone listening that wants to find out more information on DiversyFund, or even contact a member of your team, if you've got any questions about any of the topics we've covered today, what's the best way of doing that?
It's pretty easy. You could go to our website, www.DiversyFund.com. You could also follow us on our social media channels. We're on Instagram, Twitter, Facebook, YouTube, LinkedIn.
Well, a huge thanks for coming on the show today. I love what you're doing there. You're disrupting those old school investment practices and talking about the rise of crowdfunding and the use of fintech in real estate and entrepreneurship and business development. But more than anything, you're giving the average Joe or the average guy in the street a chance of investing in a world of real estate, which in previous generations they never had or might not have been able to achieve. So I applaud what you're doing there, and a big thank you for coming on and sharing your story today.
Great. Appreciate it, Neil. Appreciate it so much. Thank you.
We often hear about how fintech will change everything. And then, of course, we've got blockchain and cryptocurrencies being added into the mix too. But what fascinates me is how everyone now has an opportunity to have a seat at the table. And they're able to make investments in worlds that might have been closed to them in the past. So a big thank you to Craig for coming on and sharing his expertise and his insights of how technology is transforming real estate. But do you have any experience of crowdfunding in real estate? If you do, this is your moment, so let me know your thoughts, because this show is not just me and a guest talking and waxing lyrical every day. Everyone listening is a big, big part of this show, and I want you to know that. So wherever you listen, if this is the soundtrack to your day or your commute, I want to hear from you. And I don't just say this at the end of every episode, I genuinely mean it. So please leave me a voicemail or say hi over at my website at techblogwriter.co.uk/podcasts and send those questions over. Or equally, you can send me a quick tweet at Neil C. Hughes, or even email me at techblogwriter@outlook.com. So a big thank you for joining me again today. It's great having you around. And as I put my coat on and prepare to leave, may I just say a big thank you for listening, and until next time, don't be a stranger.
Thanks for listening to the Tech Blog Writer Podcast. Until next time, remember, technology is best when it brings people together.